Welcome back to Morning Markets. Thank you for being here. U.S. Fed Reserve Chair Jerome Powell, as we just noted, is speaking to Congress right now to offer insight and perhaps some subtle clues on the interest rate outlook in the United States. He has suggested that more progress needs to be seen on reducing inflation before the Fed makes a step down. Our featured guest is John Wilson. He's co-chief executive officer and senior portfolio manager at Ninepoint Partners. John, thanks a lot for coming in. Is this the message you expected from Powell? Yeah, absolutely. I think he's exactly right. Inflation is a difficult problem, as we'll talk about a bit later with elections and everything else. It's I call it political kryptonite. People don't like it. And you need to be really careful. It's not a guarantee that they're going to get back to their target rate. So they're going to be really, really careful. The fund futures market right now is discounting pretty much a certainty that they cut in September and again in December. Personally, I think they will never say this, but I think they'll be very hesitant about cutting before the election. So. Interesting. Yeah. The market seems undeterred. I mean, the market took off last fall as soon as the Fed hinted that it was now pivoting to considering rate reductions from raising rates to fight inflation. The Fed still hasn't cut. Powell is still very cautious, telling people don't expect a cut anytime soon. And yet here we have the S&P 500 at an all-time high this morning. Yeah, although we talk about two really different markets, right? I mean, it's the Magnificent Seven and then everybody else. And those are two very different valuations that you're paying for and two very different growth outlooks. I mean, it's easy to say these Mag 7 stocks have gone, way ahead of themselves and everything else. But if you look at first quarter earnings, those stocks grew earnings almost 50%. Yeah. The rest of the market is down a little bit. So it's really two different markets. And we'll talk with John about his second quarter U.S. earnings outlook in the upcoming segment of this show. In the meantime, let's turn to politics around the world, which have been very volatile recently. England tossing the Tories out with a center-leaning left government. France, it's difficult to really understand what's going on there. Looked like the hard right party was going to win instead of hard left. A coalition that includes hard left parties has won in France. Yeah, I think it's been tempting for people to look at these elections around the world and say that, there's a rise of the far right. But really, when you look at what's happening, whether that's largely in the Western democracies, but even in places like India, it's sort of an anti-incumbency. Whoever's been in charge while this last period has been happening with inflationary forces around the world, people are unhappy. They want someone new. And so you see things like the Tories getting the fewest seats they've ever had in the Commons. You see Macron, getting a coalition government, but pushed down from where he was. And so, it's what's really bubbling up there is I'm blaming somebody for inflation, an anti-globalization. I don't want immigration. I want tariffs. I want to keep jobs at home. All of those forces, it's this rise of populism, whether that's sitting on the left or the right. And where is it going to go ultimately? How much of a rollback of globalization or free trade do you think the world is now set up for? Well, so if you look at the UK election, the Labour government doesn't, they've appointed all their cabinet ministers, nobody for trade. He doesn't have a stated trade policy other than he's not in favor of free trade, which is what the Tories were pushing. If you look at the U.S. election, we'll see what happens there. It's obviously getting pretty dicey in terms of which way that goes. But Trump is on the record of 10% tariffs across the board, much higher tariffs for China. So the U.S. will lead on this front, but I should point out that Biden hasn't exactly removed any of Trump's tariffs either. So that's politically popular. It is inflationary. It's probably not good for growth over the long run, which again is why you see people focused on these 7 mag stocks that have been able to deliver growth. It is. You make a very interesting point there that protectionism ultimately is inflationary. When you add to the cost that ultimately U.S. consumers will pay those tariffs, won't they? Those goods will continue to come into the United States, but they'll have higher prices on them artificially from tariffs being imposed. One thing we talk a lot at Ninepoint about is how do you keep people invested for the long term? And if you look at inflation, there's a long-term component, which is all of these forces that, to us, are kind of inevitable right now. And then there's, of course, the short-term stuff. What's the economy going to do in the second half? What's the Fed reaction going to be? But if you have a longer-term perspective, we're going to have a neutral interest rate that is much higher than what we became used to since the financial crisis. So what does all of this mean to Canada? Well, unfortunately, I'm obviously Canadian living in Canada. We're in a more difficult situation, actually. Our growth has been weaker. Our
inflation has actually been higher. Our wage inflation especially has been higher. We don't control interest rates the same way the U.S. does as a reserve currency. So we're in a far more difficult position for the Bank of Canada. They have started cutting rates. Obviously, they did one cut already. But, you know, the dollar's weak. That doesn't help because a weak dollar means imports are more expensive, and we do import a lot in Canada. So it's going to be challenging. But my guess is that they're going to continue to lead rates lower if they can to try and support growth. But they're going to keep an eye on what happens to inflation. They're going to keep an eye on what happens to housing, which has obviously been another issue.
We were not immune from U.S. tariffs during the Trump administration. No. What would higher tariffs mean to us?
Well, it'd be extraordinarily negative for us if tariffs get slapped on across the board in the U.S. And then, you know, that would have to be negotiated through the whole NAFTA agreement, which was negotiated during Trump's administration. But, you know, if we were not able to get exceptions to that, it's going to be really difficult for manufacturing, especially here in Canada.